All right, everybody, we're going to go ahead and move on to the next segment. Let's go ahead and get this party started.
Okay, you want to jump into the stock market, that's fine. Come on armed at your own peril. So I'm here to prep you before the battle begins this weekend. Horns versus Claws.
Hey, what's going on, everybody? We're going to go ahead and start with the Birds. All right, so they're starting to claw down the market a little bit. But here's the fun thing about MasterCard, because even though they had two shots, when I say two shots, I'm talking about completely two shots at going ahead and turn this completely bearish, and they failed. Here's one instance here, and here's one instance here, right? So we had a nice little drop here, drop there. They just could not make this completely turn bearish. And if we look at the stochastic and the MACD, this thing does look like it's put in a bullish divergence to continue to the upside. Now the question is it strong enough for it to go ahead and break that 450 level and start to continue to go through that gap? I'm leaning on no. The only reason I'm saying that is because we're starting to pull up to dividends, and they tend to take their cash after dividends, so keep an eye on that. Now the next one we're going to talk about is Merck. Now Merck is in a very interesting spot. Healthcare, I do think overall healthcare is one of the things that nobody really invests into. So looking at Merck at the level that it's in, it looked like investors are starting to step in a little earlier than I expected, because I was looking for it to come down, especially the way this information was coming in. It looked like we had a nice little bearish divergence here, and it's going to continue down. I was looking for a nice little reset. Now that could have been just a bull trap, just to go ahead and get it up there, and then now they're going to go ahead and hit us with a bear trap roughly around 127.96. I would love for it to retest 120.79 before I start taking this upside up any serious. So I'm kind of temporary bearish more than I'm really bearish on the healthcare market. All right, the next one we're going to talk about is DELL. DELL is in a very interesting spot. I do think that they are beneficiary to everything as far as tech. Everybody started pouring as much money as possible, and the valuation on DELL is not that bad. So if we look at this horn tide run up from October and this perfectly good gap up, you can see that was based on this earnings cycle when it was all said and done. But missing the next earnings cycle makes me think y'all should temper your emotions a little bit. So you got some profit taking that's happening here, profit taking happening here. So this does look like a very symmetrical triangle-ish, just a little bit. So whatever micro uptrend that's happening here is going to go ahead and put pressure on that uptrend and probably bring it down. Look for it around dividends. Now the next one we're going to talk about is all the horns going on with the bulls. All right, so let's start with UNH. Now UNH I love, just like the rest of healthcare. I do think it's going to be bullish. I have this potential uptrend because we found support at these levels before, but it is still a symmetrical triangle. This thing can do whatever it likes. I do think that it could go ahead and test like that 500 level again before it actually starts dropping. So we'll see what happens, especially with earnings coming up. Now the next one we're going to talk about is PNC. PNC, just like the financial sector, everybody's running into like banks and everything else. JPM did a nice little run. Citi had a nice little run. So I think there's some profit taking happening with the whole financial sector, but PNC was one of the laggards here. So I want to see if PNC can get on this upper register on the MACD. A nice little reset of the oscillators, maybe come into the earnings cycle would be great for PNC, and then we could go ahead and see some good action to that upside. Now the last one we're talking about is Meta. Now Meta did something very interesting. So I was talking to somebody in the community, and they said it looked like a cup and handle. I think it looks like a cup and handle, but I did tell him this: if it looks like a cup and handle and acts like a cup and handle, if it's a duck, it's a duck. If it quacks like a duck, then treat it like a duck. It is in the uptrend and is put in a cup and handle. That is not normal. You want to see a cup and handle and the bottom of a downtrend. But with everything that's going on with tech, this was another ticker that was just beneficial to the whole rally, especially the way you see QQQ and NQ move. Now, if you're going to play this, be very careful because there is a very small gap that's right down here. So this can get filled at any given moment. And that right there is the horns versus claws.